There's a building in Washington, D.C. that shouldn't exist. The old post office pavilion, completed in 1899. Massive granite columns rising like ancient sentinels. A soaring 315-foot clock tower that still pierces the skyline. Vaulted ceilings adorned with hand-carved stone details that catch the light like whispers from another era. The entire structure cost the federal government $3.2 million. And here's what makes it impossible on paper. The federal government built it without collecting a single dollar of income tax from American citizens. In fact, the federal government constructed the entire transcontinental railroad system, funded the Spanish-American War, erected the Library of Congress, and maintained a standing military across 45 states, all before 1913. That was the year the 16th Amendment was ratified, granting Congress the power to levy a direct income tax on individuals for the first time in peacetime. Before that, the official story is simple, almost comforting in its neatness. Tariffs, excise taxes, and occasional land sales covered everything the young republic needed. But the math doesn't match the buildings. Let me show you what I mean. In 1890, total federal revenue sat at approximately $43 million. The majority, roughly 57%, came from customs duties. Internal excise taxes on alcohol and tobacco added another 30%. Land sales and miscellaneous fees filled in the rest. That same decade, the federal government funded the completion of multiple transcontinental rail lines, began serious infrastructure work on what would become the Panama Canal, constructed 27 new federal courthouses, and expanded the Navy from just 42 ships to 95 modern vessels. The USS Indiana, launched in 1893, alone cost $3 million. The pension building in Washington, finished in 1887, ran $886,000. Federal appropriations helped complete the Montana State Capitol in 1902 for $485,000. And the 1893 World's Columbian Exposition in Chicago received $2.5 million in direct federal funding on top of private investment. Add it all up across one decade, and the numbers stop cooperating with any textbook explanation. Consider the sheer scope. Between 1865 and 1913, the federal government constructed infrastructure that rivaled the grandest projects in Europe. State capitals crowned with domes larger than the U.S. Capitol itself. Courthouses featuring marble shipped from Italy. Post offices in towns of just 3,000 people, built with granite facades and bronze fixtures worthy of a palace. Custom houses in bustling port cities designed like Roman temples. This wasn't frugality. This was abundance on a scale that still stands today. Solid, unignorable proof carved in stone and steel. And the people who kept the books remembered. There was an entire generation of Americans who worked inside the federal machinery before 1913. Clerks, accountants, and Treasury officials who watched the money move every single day. Many lived long enough to be interviewed in the 1930s and 1940s by researchers desperate to capture the last living memories of the old economy. Their testimonies were carefully filed away in archives and historical societies. Most were never widely published, but they exist. Mary Ducati was born in 1868 in Boston. She worked as a clerk in the U.S. Customs House from 1889 until 1922. In a 1938 interview preserved at the Massachusetts Historical Society, she described the meticulous ledger system used to track tariff revenue. When the interviewer asked whether tariffs alone could have funded all federal operations, she paused for a long moment. Then she answered, there were other columns. We called them special appropriations. When pressed on what that meant, she simply said the records were kept separately, and she had never been permitted to discuss them. John Hastings, a Treasury Department accountant from 1895 to 1931, gave a nearly identical account in a 1941 oral history now archived at the Library of Congress. He recalled reviewing federal expenditure reports in the early 1900s and noticing surpluses that simply did not line up with tariff collections. When he asked his supervisor, he was told those funds came from asset management and were not part of the public appropriations process. He never saw a full accounting. These weren't conspiracy theorists spinning tales. They were clerks. They filed receipts, tracked expenditures, and balanced ledgers for decades. And what they described does not match the official story we've been taught for generations. The official story insists tariffs covered everything. In 1880, tariff revenue reached $186 million. By 1900, it was $233 million. By 1910, it had grown to $333 million, modest, steady growth over 30 years. Yet during that exact same period, federal expenditures exploded from $268 million in 1880 to $694 million in 1910. The gap widened every single year. So where did the money come from? Textbooks offer the usual answers: efficiency, economic growth, careful management. But the buildings say something else. They say there was wealth flowing into federal coffers from sources that were either never publicly reported or were deliberately obscured under vague categories. Wealth substantial enough to fund construction projects whose grandeur still defines American cities more than a century later. Some of the most durable and beautiful infrastructure the nation has ever known. And then, in 1913, everything changed. The 16th Amendment passed. The federal income tax became law. Within a generation, the last Americans who remembered how the system truly worked before that year were gone. But the receipts aren't gone. The appropriations records, the customs ledgers, the Treasury reports from 1870 through 1912 are still sitting in the National Archives. The oral testimonies from those elderly clerks and accountants remain preserved in university libraries and historical societies. The buildings themselves still stand, physical, undeniable proof that something funded them. The question isn't whether the government had money before 1913. Clearly it did. The real question is where that money came from, and why the people who knew the answer were never asked to explain it fully before they passed away. Let me show you a specific case that makes the funding question impossible to ignore. The 1893 World's Columbian Exposition in Chicago, the legendary White City. 27 million visitors in just 6 months. Over 200 buildings spread across 630 acres of breathtaking neoclassical splendor. Official records show the federal government appropriated $2.5 million for the entire exposition. The total documented construction cost was approximately $28 million, with private Chicago investors covering most of it. But here's where the numbers fracture. The government building alone, a neoclassical masterpiece covering 420,000 square feet, was funded entirely by federal appropriations. According to the official exposition directory published in 1893, its construction cost exactly $400,000. It featured a central dome 120 feet in diameter, Corinthian columns carved from Indiana limestone, and interior halls finished with marble and gold leaf. The entire structure was completed in just 18 months. For context, the Washington Monument, a far simpler obelisk, took 36 years to finish and cost $1.2 million. Yet this vastly more complex government building was erected in half the time for roughly a third of the cost, and then deliberately demolished only 6 months later. The construction contracts are still in the archives. I traced them while reviewing appropriations records for the Bureau of Public Buildings. The primary contractor was the George Fuller Company of Chicago. The contract, dated March 1891, spells out materials, labor schedules, and payment terms in meticulous detail. What it does not specify is any funding source beyond a generic federal appropriation. Treasury records from 1891 show total customs revenue for the year at $219 million. Total federal expenditures reached $365 million, meaning the government was already running a deficit of $146 million. Yet somehow an additional $400,000 materialized for a temporary exhibition building that served no permanent federal purpose. That's one building. Across that same decade, similar unexplained appropriations appear again and again. The 1901 Pan American Exposition in Buffalo received $500,000 in federal funding. The 1904 Louisiana Purchase Exposition in St. Louis received $5 million. Each time, massive neoclassical structures rose almost overnight, dazzled the public for a season, then vanished completely. And each time the funding shows up in federal ledgers without clear sourcing. But here's the detail that has quietly troubled researchers since 1910. In that year, a congressional investigation led by Senator Nelson Aldrich examined federal expenditures from 1890 to 1909. The committee reviewed Treasury records, appropriations bills, and departmental budgets as part of larger debates over monetary policy and the push toward a central banking system. According to the final report published in 1911, discrepancies existed. The committee identified roughly $340 million in expenditures across those 2 decades, categorized as internal improvements and special appropriations, that lacked any detailed sourcing tied to customs or excise records. The report suggested these funds came from land management receipts and asset liquidation. yet it provided no itemized accounting. It recommended further investigation. No further investigation ever occurred. The 16th Amendment was ratified just 2 years later. There were people inside the system who noticed. Albert Gallatin, a Treasury official from 1897 to 1920, testified before the Aldrich Commission in 1910. His archived testimony describes a secondary ledger system used by the Treasury to track what he called non-tariff revenue. When pressed for specifics, he listed mineral rights on federal land, harbor fees, and lease payments from railroad companies operating on public land grants. Gallatin estimated these streams generated $15 to $20 million annually between 1890 and 1910. Substantial money, but nowhere near enough to close the $340 million gap the commission had flagged. When the committee demanded documentation, Gallatin stated that certain revenue streams were classified under administrative discretion and kept outside standard Treasury ledgers, maintained instead by the Office of the Secretary of the Interior. The commission requested those records. The request was referred. No records were ever produced. Then there is the matter of the gold reserves. In 1890, the U.S. Treasury held approximately $190 million in gold to back the currency. By 1900, despite funding a major war and unprecedented infrastructure, reserves had grown to $600 million. By 1910, they stood at $1.5 billion. The official explanation credits economic growth and international trade driving gold inflows through tariffs. But tariff revenue grew by only about $100 million during that period, not $1.3 billion. The gold had to come from somewhere. Elderly miners and land office clerks remembered. Samuel Birch, a Colorado land office administrator from 1883 to 1919, was interviewed in 1942 by a WPA researcher. The transcript, preserved at the Denver Public Library, describes a system in which mining companies paid royalties directly to the federal government for extraction on public lands. Birch estimated the payments totaled millions annually, yet the accounting was routed through separate channels, not the regular books. When asked what happened to the money, he replied, "They went to Washington. We sent the reports quarterly. I don't know what they did with them after that. Those reports should be in the archives. I've looked, they're not there." Which brings us to 1913 and the question nobody asked loudly enough at the time. If the old system was working, if tariffs, excise taxes, and land sales truly covered everything, why did the federal government suddenly need to tax individual incomes? The official justification was progressive reform. Wealth inequality had grown too extreme. A graduated income tax would distribute the burden more fairly. The 16th Amendment passed the Senate 77-0 and was ratified by 42 states by February 1913. President Taft signed it. By October, the Revenue Act of 1913 imposed a 1% tax on incomes above $3,000, rising to 7% on incomes above $500,000. The rhetoric was fairness, but the timing suggests replacement, not addition. Consider what else happened in 1913. In December, the Federal Reserve Act was signed into law, creating a central banking system and fundamentally reshaping how the government managed money and credit. Two massive financial restructurings in a single year. One gave the government direct power to tax individuals. The other handed control of the money supply to a private consortium of banks. Together, they replaced a system that had operated successfully for over a century with something entirely new. Opposition came mainly from rural states and agricultural interests. Senator William Borah of Idaho warned in congressional debates that an income tax would shift financial power from the states to Washington and create a permanent bureaucracy for monitoring citizens. He predicted it would make the federal government dependent on a revenue source that would require perpetual expansion. He was right, but he lost. Within a decade, the old system's paper trail began to vanish. In 1921, a fire in the Treasury Department Annex destroyed records related to internal revenue collections from 1890 to 1910. The cause was listed as an electrical malfunction. In 1924, the Office of the Secretary of the Interior audited land management records from before 1913 and declared many incomplete or unreliable. Large portions were discarded. In 1933, during New Deal reorganization, the Treasury consolidated its ledger systems and reclassified all pre-1913 special appropriations simply as miscellaneous receipts. The detailed sourcing disappeared. By the 1940s, the clerks and accountants who had lived inside the old system were dying off. A handful were interviewed. mostly by local historical societies or WPA researchers documenting regional economies. Their stories describe a far more complex financial world than textbooks admit. Revenue from sources that were never publicly reported, ledgers kept separately, explicit instructions not to discuss certain appropriations. But those testimonies were filed away, never published. They sat in archives for decades. By the time scholars began asking these questions in the 1970s and 1980s, the last witnesses were gone. Imagine her. There had to be one in every federal office around 1950. A woman born in 1870, hired as a clerk in 1890, retired in 1935, living well into her 80s. She would have filed the receipts, balanced the ledgers, and seen the separate columns with her own eyes. She would have watched the entire system transform in 1913 and known precisely what was being replaced. When her grandchildren asked how the government paid for everything before income tax, she might have begun to explain. Tariffs, yes, but also land revenues, mineral royalties, harbor fees, things that weren't always reported the same way. Her grandchildren, raised on the simplified textbook version, would have nodded politely and assumed she was misremembering the past. Because by the 1950s, the official narrative was already set in stone. Before 1913, the government was small and frugal, funded almost entirely by tariffs. After 1913, it became modern and expansive, funded by income tax. Clean, simple. Except the buildings from before 1913 are still standing. The granite courthouses, the marble post offices, the state capitals with imported stone and bronze doors, they are still here, physical proof that the government was neither small nor frugal. The timeline compresses with suspicious neatness. The 1870s through the 1890s. Infrastructure built at a scale and speed that official revenue figures cannot fully explain. The 1890 census captured every American alive during that transition. Then the only surviving copy was destroyed. The 1910 Aldrich Commission identified a $340 million gap and received no documentation. The 1910s and 1930s, records burned or reclassified. The 1940s and 1950s. The last witnesses died. By the 1970s, the paper trail was incomplete and living memory had vanished. But the Treasury annual reports from 1870 to 1912 remain accessible at the National Archives. The Aldrich Commission hearings are published and searchable. The testimonies from those elderly clerks are preserved in historical society collections across the country. The appropriations records for every federal building are filed in the Library of Congress. We know exactly what they built. We know exactly what the official budgets claimed. We still do not know, fully, where all the money came from. And the people who did know either chose silence, were never properly asked, or were asked too late. The archives are public, the ledgers are readable. The buildings are still standing. And the question is still waiting, exactly as it has waited for more than a century, for anyone willing to read the receipts instead of the textbooks.